I'm George Kailas, CEO of Prospero.ai. It's important to identify yourself as either a long-term investor or a short-term trader. You can be both. It's best to focus on one because either discipline takes a lot to learn. Short-term trading is much more difficult, a much bigger time commitment. 90% of retail traders lose when they trade options. And a lot of short-term traders trade options. And first of all, if you're a retail trader, I would really recommend not trading options until you have a lot of success just trading stocks. Years and years of success would be my recommendation. A long-term investor tends to be a more seasoned investor. The longer they experience the volatility in the market, the more they like to rely on a buy and hold strategy of good, profitable companies. I'm about to go into a lot of more advanced metrics, so buckle up. Some of these concepts might be a little advanced, but there's a lot of resources on the Prospero website and the app that can help you understand these better and start to add them to your toolkit. In the short term, you look at earnings and if they beat earnings, but on longer time scales, you are pretty much looking at the companies that earn the most consistently and have growth in those earnings. Those companies are going to do the best. Short-term signals, it's not as clear as the long-term signals. Social sentiment, I like to say, is a good support signal. I would never trade on social sentiment alone. If I see 100 social sentiment and 30 net option sentiment, I'm more likely to short that stock than go long. Just because people getting excited about it isn't enough. The most reliable way to be a long-term investor is focusing on profitability. Popular method for long-term investors is dollar cost averaging, where they deploy a certain amount of money into the stocks that they own or their standard portfolio every month. One of the things that is very important about what we've created at Prospero is that technical analysis can be very helpful, but a lot of the times set you up for bigger losses because it's going to tell you what the typical pattern of stocks are and draw a line of what that typical pattern is. Why we created something like net option sentiment is it's actually showing you where institutions are betting, and it refreshes every 3 minutes. It's pretty much going to only tell you what direction the stock is going. And option sentiment, which is what we call kind of our hero metric, that can change from minute to minute and really save you a lot of money. The Prospero signals can help even seasoned investors in a lot of different ways. The most popular way is something called enhanced dollar cost averaging, where instead of just deploying an equal amount of money amongst your portfolio, you can selectively deploy more money towards stocks that the Prospero signals like versus stocks that the Prospero signals don't like. Another thing that's really helpful for long-term investors is looking at time series graphs in the Prospero app. Upside breakout is probably our most complex metric. When you have a stock with high upside breakout, you're basically saying that there's a large amount of agreement in if the stock is going to go up by analysts, options prices, and price momentum factors. Downside breakout is pretty similar to it, but they're looking at if on a long time scale, a stock has a higher probability of a large loss in the case of downside breakout. We have so many great case studies of our users saying there was nothing telling me when Tesla was up 100% or when Meta was up 100% that I should keep buying, but I saw the upside breakout staying high and that kept me invested and that made me money. No matter if you're a short-term trader or a long-term investor, there's a lot more different ways that you can apply the signals. I'd recommend downloading the app. It's super easy. It's free. You can follow us and really learn how to make it a part of your toolkit.